its highest ever turnover of the 9 months period, and it's almost 912 crore, a 32% year-on-year basis increase. Power tillers sales have gone up by almost 55.1%, and power weeder sales also have gone up almost by 63.3%. So let's deep dive into this. Let's understand all the aspects of these numbers. We are joined by Antony Cherukara, CEO, VST Tillers Tractors. Hi, morning, and welcome to the show, Antony, and congratulations for the wonderful set of numbers. So just wanted to understand what actually drove the growth, and what would be the growth levers going ahead.
Good morning, and thank you for having me. We operate in the small and farm machinery space, especially for small and marginal farmers. We sell power tillers, power weeders, reapers, compact tractors, and all of the segments have grown in the last 9 months, and very healthy growth in the power tiller segment and the power weeder segment. As I have said before, the need for farm machinery, especially in the small and marginal farmer segment, is very high. The labor costs are going up. There is huge demand, and this growth will sustain going forward.
Right, Mr. Anthony, tell us also the fact about as far as these segments is concerned, which of these segments is driving the growth for you?
All the segments are growing, although at a varied pace. The largest growth has been in the power weeder segment, with almost 63% growth in the 9 months, followed by power tiller at about 57% growth, and the domestic tractors have also grown at about 18%.
Anthony, just one clarity, because the investors would be really interested in knowing your going forward guidance. Explicit guidance will really help them strategize and give a clear future trajectory also. Along with that, a notable improvement was seen in the cash generation from operations, which stood almost by 108 crores in 9 months, a substantial turnaround from a negative 35 crores in the previous year. So what's the strategy there, and any going forward guidance if you might just want to directly address the investors on that?
Yeah, definitely on the working capital front, we have been working on efficiencies. Last year, we strategically increased our receivables to support our distribution and dealer network, which we have brought down this year. We were at about 75 days of opening receivables, which we have brought it down to about 55 days, and hopefully we should be reducing another 5 days by the end of this year. So we should be back to normal in terms of receivables. And on the inventory front, we are working on the TOC principle and the efficient supply chain. I'm sorry, there has been a power supply issue here, but I hope you can hear me. So the efficiency continues to build in the supply chain, which will also get reflected on the cash flow of our operations. As far as guidance is concerned, we believe that we can close this year at about 25 to 30%. We are at about 32% growth in the 9 months, but so definitely we should be able to close between 25 to 30% this year.
Right. Also, Anthony, your EBITDA has more than doubled. In fact, even your profits are up almost 18 times on a year-on-year basis. Firstly, tell us, is this sustainable, and what would be the margin guidance going ahead?
So the EBITDA has been in line with the guidance that I've given earlier, which is 11% to 13%, closer to the 13%, having an upside. They're at about 13.1% as of now. We would continue in that range. However, we continue to invest. We have announced our possible entry into the US market earlier, and now that possibility has kind of turned to a certainty with the tariffs going down, and we should be entering the US market by 2027. There should be some amount of revenue expenses there coming in the initial days, but still with all that also, we continue to maintain our guidance at 11 to 13% on the EBITDA front.
Sure. Antony, let's just talk about potential headwinds, and I believe this includes fluctuation in agricultural demand, input cost volatility, or competitive pressures. What is your strategy going ahead in order to face all of these headwinds?
Whatever you said as the demand drivers, definitely all these are a reality which faces our farmers in our country. What we have done is to diversify Our geographical spread, we are looking at international markets in a big way. Today, we have we used to be at 4% of business in terms of our global business. Today, we are at about 13%. We would want to continue to grow it in the next 5 years. We should get it to about 25% of our total business. So geographical diversification is one. Secondly, how do we do product diversification? We are looking at adjacencies. We are looking at a larger aggregate business wherein we supply engines to various OEMs, not only in India but across the world, especially in terms of compact engines. That's a diversification opportunity that which we are looking at. So in product diversification perspective as well as the geographical diversification perspective, we believe that we can deal with the risks that will come our way.
Right. Also, Anthony, correct me if I'm wrong, your tractor exports has been a sore point for you. Now, with various bilateral trade deals that India has been signing with, whether it's EU or whether it's the US, what would be your trajectory as far as tractor exports are concerned? Do you see a revival coming there?
Definitely, yes. There has been a lot of difficulty in terms of logistics to Europe, wherein we had to take a longer route, blocking our capital, blocking our distributors' capital, anywhere between 120 to 160 days. And now with these FTAs coming in, we are establishing our base in Europe. In Q1, we should be establishing our base in Europe. This will help grow our business, increase the rotation, and the cash flow for our distributors and ourselves.
All right. As a company, you also focus on product innovation and market expansion, which also includes your recent efforts to establish US subsidiary. Any update on those fronts?
Yeah, we have restarted the whole work again. The product development never got stopped because it was a global platform. So the product development is as per plan continuing. So we should be able to launch in the US in 2027.
All right, Anthony, thank you so much for taking the time out and joining us and giving